Hello and welcome to yet another CNBC TV-18 investor camp from Jaipur. This is the first of 2016 and everybody knows 2016 has seen the most horrendous start to the year for the stock market. Markets across the world are down and India is down with them, and everybody is trying to figure out whether the budget can change anything around, or is this going to be another down year for equities after what we saw in 2015. It's time to talk about the mid-caps and whether this is a good time to go about buying mid-caps. Porinju Veliyath is a seasoned mid-cap investor and he's out with his perspective on mid-cap cherry picking for 2016.
The kind of dynamic economy India has, it gives huge opportunity for value investing in any kind of markets. Everybody should be aware what's happening, what's going on in the world, what's going on in India on micro level, macro level, industry levels. The disruptive technology, which is all of us know, it's all very important. I'm not telling one need not know about these things. But the mistake, investors do the mistake when they convert these into action. All these bits of information, when they gather it together, they should have some relevance when you think of buying an equity share in India, when you try to own a piece of business in India. Look at the big picture. My advice to investors is only about looking at the big picture. We are below $2 trillion economy today. And it is dangerous for us to remain like this and growing at 5, 6, 7%. If we continue to do this, it's going to be dangerous. And I'm telling you, if we continue like this, if the stock markets continue to be at this level for some more time, for a couple of years more, your money in the bank is not safe, I'm telling you. We cannot remain at these levels. We have to grow. We have to create jobs. We have to create the infrastructure. We have to create wealth for the economy. Just below $2 trillion economy, we cannot feed the 1.3 billion people. We cannot take care of their comfort. See, practically 60-70% of Indians are living in poverty. They don't have quality of life. They have uncertainties ahead. They don't know what's going to happen, not next year, next week. So that is the real situation of real India. Of course, I think the new government has got very, very long-term plans, projects and themes for the economy, for a faster growth, for making it a $3, $4 and $5 trillion economy in the coming years. So in that process, I am very confident Indian equities, they can add another trillion to the market cap in the next maybe 3 years or 4 years' time. Going forward, investors should be extremely selective and choosy in picking stocks, because a lot of companies, a lot of sectors will have challenges and they may underperform. But India as a country, as an economy, as an equity market will have a big outperformance in the market, and it could be a big surprise the way markets can take turn. And in 2016 most people are not very bullish on the markets, but I am very bullish. There can be the new level of Sensex and Nifty coming up in 2016. A lot of money flow, when I talked about domestic potential fund flow into the market, the SIP is a major thing happening in the country. Huge money is being collected and deployed in the market. This can go further, this can be further boosted. Maybe in 2016, you may see that SIP money alone can be a very significant part. And a lot of people are still waiting for opportunities. So once the confidence happens, the mood and sentiment changes for positive, not depending on this week's movement, I am telling. But at the same time, there is a big chance we have already bottomed out by Nifty and Sensex.